Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel. Today I'll be talking about something that a lot of people have been sending me messages to discuss, and that's how to identify key zones on our trading chart. So first of all, before we go into it, it will be pertinent to understand what key zones are. What are key zones? So the simple definition I always give when I'm asked that question is that key zones are rejection points on your price chart. So take that again. Key zones, they are rejection points on your price chart. And what do we mean by rejection points? They are places on the chart where prices have gotten to severally and have been rejected at one point or the other. In other words, a key zone is a zone that presents us with a high probability of predicting the next direction of price on the chart. So we can also say that a key zone is a zone where price has either been stopped from going upwards or stopped from continuing downwards. So by that simple definition, every key zone will tend to act as either a support or what? A resistance. So to put this into illustration before we go to the chart, if we have price going in the upward direction like this, of course, what I'm doing now is price in an uptrending fashion or manner. Now, each resistance point that stops price from continuing upwards becomes what? A key zone. What do I mean? If I take this, now we can see that price going upwards got to this point, was rejected. In other words, it was resisted from going upwards. Now, because this point resisted price from going upwards, it becomes a key zone in determining the direction of price when next price gets there. So if we move this upwards, what we now need to pay attention to would be what happens next when price comes back into the zone. Now, price got here, was rejected. Now, when price broke through this zone, because it acted as a resistance initially, when price is coming back into the zone, it becomes what? A key zone. So a key zone helps us to determine the direction of the market when price gets into that particular zone. So we can take this as what? A key zone, because in the past it acted as a resistance and later on it acts as what? A support. So having that in mind, we can also say that we have different key zones. The strength of a key zone is usually dependent on how much that zone has been tested in the past. So if we have a key zone that just had like 2 touches in the past, it would not be as strong as one that has maybe something like 3 touches. If we have this case, 1, 2, 3. So a key zone of this nature would be, we expect it to not hold weight as compared to, not hold much weight when relative to something like this. And with 3 touches, we expect that one that has been active in the past on 4 different occasions should be stronger than one that just had what maybe 1 or 2 touches. So another thing that defines the strength of a key zone is the time frame. Now, what do I mean? The key zone on the monthly time frame is expected to be stronger than a key zone on the weekly or the 1 hour time frame. So if we draw a support or a resistance on the higher time frame, we expect price to take longer time to break through that support or resistance as compared to the one that we draw on the 15 minutes or on the 30 minutes time frame. So to go over what I just said, I said key zone are rejection points on the price chart that gives us a high probability of predicting the market direction. We said these key zones could either stop price from going upwards or they resist price from or stop price from going downwards. We say when they resist price from going upwards, these key zones are referred to as what? resistance zones. And when they support price or stop price from continuing downwards, we say that the key zone is a what? A support zone. Then I just also mentioned that key zone, the strength of a key zone depends on the number of touches it has had in the past while acting as a support or a resistance, and also the time frame in which this key zone is drawn. What do I mean? Key zones in the higher time frame tend to be stronger than key zones in the lower time frame. So without wasting much time, let's now go into the chart to see exactly how I draw these key zones. So let me take these out. Now, the price chart I have before me is that of NZD USD, the New Zealand dollar versus the US dollar. So the first thing first, in order for me to be able to see price in a larger dimension or in a larger frame, all I need to do will be to zoom in a lot. The first step is to go to the highest time frame. So like we all know, I like starting my analysis from the higher time frame. So, and that higher time frame could be the monthly or the weekly. But I like drawing my key zones from the monthly time frame, especially when there's a lot of information. So this is a monthly time frame. So the first thing to do is to zoom in. Now, when I zoom in, I now start looking out for what? Rejection points in the market. And then I map the key zone with this rectangular tool. So I can take this, look at the chart very well. When we say rejection points, there must be rejection points that you don't need to scrutinize a lot to say, oh, this is a rejection point. It must be rejection points that are almost obvious to the eyes. Like when anybody looks at it, you just know that, oh, there are lots of price rejection happening in that area. So, like in this case, the first one that jumps out to me would be this particular point. Now, we can see that price got here and was rejected severally. So I can draw this and then extend it. Excuse me. So when I draw this, extend it to the left. And having done that, then I can clone what I have here. So when I clone this, I can come down here. We can see that price was rejected from those points upwards, rejected upwards, rejected upwards, rejected downwards here, and the same thing. So I can extend to the left. Then I can come here again and clone this. Now we can also see that price was rejected here, 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 severally. So you can see that all you just need to do is to get the rejection point. Then if I clone this upper part, I get the same thing. I take it up a bit. You can see that when price got here, it was rejected, got here, it was rejected. Each candle on this chart represents 1 month. So even if you are getting just one candlestick rejection from a particular point, that's a lot. So imagine when you now have, like in this case, we have 1, 2, 3, 4, 5, 6, for 6 months. This particular, just 6 months in a particular space of time, that this resistance zone stopped price from going upwards. So I can take this also, clone it again, and then put it here, take it upwards, because we had a lot of rejections here. You can see price got here, was pushed down, pushed down, pushed down, pushed down, pushed down, got here, was pushed upwards, upwards, upwards. So, and also when you are drawing your key zone, you try to make sure that the zone accommodates as many candles as possible, as many candles in that zone as possible. So I can clone this again and push it upwards and take this upwards to where we have the most number of rejections. So because I'm drawing this on the monthly time frame, you can see that when we go When we go maybe further down to the lower time frames, you would see that there might now be need to put in other zones within the key zones that you've drawn from the major time frame, because actually it will take a longer period of time for price to get to these zones. But what these zones do for you is that, just as I've marked this now on my chart, I can even add the last one. Let me add the last one to this zone. Now, what this does for me is that I can leave these zones on my chart for a year and not get for years and not get to touch it. Why? Because one candle on this monthly chart represents a month. So imagine the time it will take for price to leave this particular zone. We can even see that just merely drawing this zone, I can see now that price is currently on a very strong support zone for NZD USD. So imagine how long it will take this price to leave this zone to get to the next zone. A whole lot would have to happen. But what this does for me is that I already know that because price is currently on sitting on a support from the monthly time frame, then it shapes my bias that the market is going to be going upwards, instead of me thinking of selling here on a very strong and selling at a very, very strong support zone. Now, imagine for 1 month, 2 months, 3 months, 4, 5, 6, 7, 8, 9, 10, 11, just within this space, this particular zone where price is at now acted as what? A support, rejecting price from going upwards. And now it is currently pushing price again upwards. So why will I want to sell at this particular zone? So that's one of the advantages of drawing your key zones on the higher time frame. So if I'm to zoom in again and we'll go to the weekly time frame, my network is quite slow. Okay. Now, the weekly time frame, we can see that the zones now look more prominent. You can see that the chart looks beautiful and really, really simple. There's no clustering everywhere like maybe you have in some case. Now, even if I do not want all these other zones, I can decide to take them out and just work with 1, 2, 3 to see what price is doing. So this is the simple method I use in drawing my key zones. These zones will help you to analyze the chart easily. It will help you to know where price is leaving from and where price is headed. So like I said, I say key zones, they help us to easily predict the probable direction of price in the market. I wouldn't want to stretch this video longer than this. If you are coming across this channel for the first time, please do well to support by subscribing to this channel for subsequent videos. We drop a lot of videos on top-down analysis of different financial assets. And if you're looking to start off your trading journey or you're looking to make it better, you can reach out to our academy via the contact details on the YouTube bio. Thank you for your time and cheers as we look forward to making subsequent videos.